A very good afternoon to you, grade 12 learners. It is a pleasure to have you in my class today as we're just a few hours from the final exam. I know that you guys have started, you have put in the hours, you've put in a lot of work into the preparation for the final exam that is to take place tomorrow. So this lesson, it is just to encourage you and to help you once more and to remind you of some of the calculations that we've done throughout the year. So here are my objectives for today's class. I'll talk to the structure of paper one, all right? And then I'll also talk to the statement of comprehensive income, the statement of financial position. I'll also speak on the cash flow statement as well as financial indicators. You will see that there are certain aspects that I have not touched in this presentation, such as your corporate governance. These are questions that you have to go and prepare after today's class. Your analysis and interpretation of financial statements. Some of you might have received a document already which has been sent to you that will assist you in the preparation as we are just a few hours away from the final exam. All right, so the structure of paper one. Question one is structured in 4 ways. So you will see that your question 2, your cash flow statement and financial indicators, and your question 3, which is the analysis and interpretation of financial statements, and question 3, your auditing and corporate governance. Normally, your question 4 rather, normally these ones have been constant in the past exam papers. And the one question that would change is your question 1, that is the statement of comprehensive income. So the other bottom 3 have been consistent. It has been your cash flow, your analysis, and your auditing. It is question 1 that has been changing over the years. And the first option is whereby you have the statement of comprehensive income and together with the statement of financial position. So this is where you are given information and you must prepare the statement of comprehensive income in relation to the statement of financial position at the same time. And you see that in the most recent papers, this is what has been tested. That is both statements in question 1. And I want to encourage you that when you do this particular question, please do the adjustments in the same moment, in the same time. That is, when you do your statement of comprehensive income, also do the statement of financial position. Do them simultaneously at the same time. That will allow you to save on time and be able to finish your exam well in time. And then the second option that you might find, as I've said, you see that this one remains constant, and this is the one that has changed now. So it is your statement of comprehensive income and notes. So here you can see the statement of financial position is not there now. It is just the statement of comprehensive income and other notes that can be tested. Let's see option number 3. On option number 3, as I've said again, these ones have remained constant. What has changed is this one here now. So now you don't have the statement of comprehensive income anymore. You now have the statement of financial position, that is your balance sheet, together with notes. It is very important, learners, that whenever you see shaded areas on your answer book, do not write in those areas. The areas that you must write in are the clear white parts. The shaded area, the examiner is saying, do not write here. And then the last option, therefore, is this one. Remember, your bottom 3 remain constant. And then here we have the calculation of correct net profit after tax, as well as the statement of financial position. It can be a full, or it can just be equity, or it can just be the asset section, depending on what the examiner is going to test. So far I've discussed 4 options, and it is very important that in the remaining hours, make sure you spend enough time as you prepare for your final exam. Okay, let's begin with activity number 1. So because we just have about an hour and a few minutes for this session, I will not cover all the adjustments that are within the syllabus. That will be impossible. So I'll just cover particular adjustments. I'll focus only on a few adjustments, And I hope that all the adjustments that I would not have covered in here, you will refer to them in your past exam papers. There's a lot that you've covered during the year with your teachers. And please go back to that work which you covered in class that will assist you with other adjustments that will not have been covered in today's session. So, in this paper, it says Starlight Limited. The information relates to the financial year end on 28 February. The company trades in electrical items. Very key. Point number 1 today. In the 10 minutes reading time that you get tomorrow, make sure you read the question, apply your mind. When you read the question, remember you read the question paper together with the answer book. So when you read these ones, understand what the examiner wants you to do. Do not assume that he might be or she might be asking me this one, but apply your mind, understand what the question is all about in the 10 minutes reading time. And then it says, refer to information B. Calculate the value of closing stock of light bulbs on 20 February 2023 using the weighted average method. You will see with the recent past papers that the examiners have brought in your inventory valuation into paper 1. So you have to know your 3 inventory valuation methods. That is your specific identification, your weighted average, and your first in, first out. Because this can be tested even in paper 1, as they can be incorporated either in the statement of comprehensive income or in the statement of financial position, depending on how the examiner would want to bring these particular methods. All right, so here is the information that we're given, and we're told that a physical stock count on 28 February revealed 2,774,800 stock on hand. However, this figure excludes, very key, the figure excludes the closing stock figure for light bulbs. Note that the weighted average method is used to value the light bulbs. So what we're required to do here is to calculate now the value that has been omitted. And here's the information that we are given. So let's quickly begin our calculations. We know that once we use the weighted average method, I'm going to have a straight line over here like that, where I have my rands over my units. And then I'm now going to begin with my stock that is available for sale. All right, I'm going to look at the stock that I have been given. All right, so I'm going to now say the stock that is available for sale, that is your 3,894,000, and the number in units is 55,000, and here it's 55,000 here at the bottom. And then I'm going to say plus, because here I've been given carriage, which is 27.5. So I'll come here, then I'll add my 27,500. Okay, let's see if we can quickly simplify that. Let's see if we can get our calculator. There it is. So we'll see the 3,894,000, and then we're going to add our 27,500 like that. And then that's going to give me 3,921,500. That's 3,921,500. And then you divide that by your 55,000. Okay, one more point that I need to emphasize. You will see that over the year, I've been bringing the same calculator. I've never changed my calculator. Do not change the calculator overnight. So the same calculator that you've been using in class, make sure you take that calculator as long as it is reliable, because you don't want to start learning a new calculator in the exam. So take a calculator that you've used during the year, a calculator that you understand, a calculator that you know, as I always bring mine here. So we're going to say that one now, and then we're going to divide it by 55,000 like that. And then that is going to give us now the average price per unit, which is going to be my 71 rand 30. So I'll come here, then I have my 71 rand 30, 71 rand 30, and then I'm now going to multiply that by the units on hand, and the units on hand are 1,700. Then I say multiply by 1.7 like that. So I'll simply say multiply by 1,700, and then that's going to give me the value of my closing stock, of my stock that is missing, the value of the stock that is missing, which is 121,210. 121,210. Remember, this figure excludes. So the 121, 210, this is the amount that was excluded. The amount that was excluded. Okay, so the examiner can bring this in a different way. Maybe the stock was stolen, and there are several ways that you must calculate a particular adjustment. Okay, and then let's come now to the next part of this adjustment. Now, we now have that value of stock which was excluded. Remember, it was 121,210. That is the value of that stock. And now we are told that this is the value of stock that was on hand. All right. And if we come to the extract from the pre-adjustment trial balance, we have our trading stock here, which is 2,969,800. What that means is I can then calculate either my trading stock surplus or trading stock deficit. All right. So if I come here and I'll say the stock that I am having according to the business records, that is your 2 million. So I'm going to come here, then I will say I have 2,969,800. This is what I have according to the business records. But according to the stock on hand, I have my 2,774,800. And then I'm going to add my 121 to 10. So if I add these two amounts, that means I'm going to say that plus the 2,774,800. That simply means I now have 2,896,010. 2,896,010. This is the stock that we now have on hand, which is less than the stock that we have according to our records. So in this case, we have a trading stock deficit. A trading stock deficit. So I can come here and say trading stock deficit. So I'm going to say trading stock deficit. And I can calculate this very easily, where I can take my 2,969,800 and then I can subtract my 2,774,800. Remember, this is in bracket, and then I'm going to add my 121 to 10. This all is in bracket, and then I end up now with the deficit. If I can get the difference, to get the difference, I'll simply now say that 2,896,010 minus the 2,969,800. That one there. And then that will give me 73,790. So I'll come here, my deficit is 73,790. And I know that my deficit will be under my operating expenses. But I know as well, remember what I said, if you get a statement of comprehensive income, it must be done at the same time with a statement of financial position. So if I were to complete the statement of financial position, that means I'll come under my current assets, and then I'll say my trading stock. All right. And I'll say my trading stock. And I know that on hand, I had 2,774,800, which I must then add the 121,210, which was not yet recorded. And then I'll end up with 2,896,010. That becomes the final amount. Okay. Can I move on to the next adjustment? Let's quickly do so. Okay, so let's go to the next adjustment. This now has to do with depreciation. Remember, I said I just need to cover as much aspects as possible. Remember that your depreciation can be tested either in paper 1 or in paper 2, or it can be tested in both papers. So you need to prepare your depreciation calculations. Do not remember how to calculate depreciation on the 1 rand residual value principle. And one of the most important things that I want to remind you is that when you calculate your depreciation, remember the son, sold, old, and the new. Remember your methods. That is your costs method as well as your diminishing balance method. Remember your methods. So as you prepare for tomorrow, once again, remember how to calculate depreciation when you're given an asset that has reached the end of its useful life. The 1 rand residual value principle. Remember how to do that. Remind yourself so that when you see that, then you will be prepared. In this activity, they wanted us to calculate the profit or loss on the disposal of a vehicle. That must not be a problem, because once they say a profit or a loss, they want you to tell them whether this is a profit or a loss. And there's a simple way in which you can determine whether it is a profit or a loss. You simply say your selling price minus the carrying value. That is going to give you either a profit or a loss. If it's positive, it's profit. If it's negative, then it's a loss. Let's come and see. An old vehicle was sold for 91,500. That simply means I'm going to come here. My selling price is going to be 91,500. Then I'm going to say minus my carrying value. I'm told that the carrying value on 1 March is the beginning. So you would have caught these dates in your reading time. Don't always assume. I've seen question papers where the financial year is not ending in March. I've seen one where it ends in April. So please do not take it for granted that it's ending in February every time. Financial periods can change. So when you are in the reading time, make sure you understand when your financial period is beginning as well as when it is ending. Very, very key. So this is ending in February and then it begins on the 1st of March. So 1st March is the beginning. So this is the carrying value at the beginning. So I'm going to come and say minus my carrying value at the beginning, minus 104, like that. And I know that we have used this asset during the year. Therefore, I must get depreciation for this year. I must get depreciation for this year. And in order for me to get that, I'll now say, which method are we using? Diminishing balance. That means I'm going to use my carrying value, which is 104. So I'm going to come here and I'm going to say 104. Then I multiply that by my depreciation method. Okay, so my rate is 20%, and then I'll come to get the months. So I'll now say from when? From the beginning, which is March. So you have to use your fingers in this case. You're going to say March, April, May, June, July, August, September, October, November. Do we count November? Yes, because it is 30 November. So we count November. If it was 1 November, we were not going to count it. So I'm going to come and say by 9 over 12. Let's see if we have that adding machine again. So it's going to be 104,000. And then we're going to multiply that by 20%. Okay. Just let me divide by 12 and then multiply by 9 like that. Then I'm going to have 15,600. So 15,600 becomes the depreciation for the year. So it simply means I'm going to come here and say 104 plus my 15.6. If I would put that in a calculator, I'll say 15.6 plus the 104,000. And then that will leave me with 100. So I'm subtracting. Remember, I'm subtracting here. Here I'm subtracting from the carrying value. It is 104 minus 15.6. 104 minus 15.6. Let me do it again. It is 104. So I'm subtracting from the carrying value because it's depreciation minus 15.6. It's 104 minus 15.6. And that will give me 88.4. So my new carrying value, it's 88.4. My new carrying value on the date of disposal is 18.4. So I'm saying my carrying value minus my depreciation gives me my new carrying value, or my carrying value on the date of disposal. Very key to know that if I say carrying value minus depreciation is equal to carrying value. So this can be carrying value at the beginning minus depreciation to give me carrying value on the date of disposal. So I had 104,000 and I subtracted 15.6, which is depreciation, and it will give me 88,400. That is my carrying value. So I can now get either my profit or loss over there, where I'll now say my 91.5 minus my 88.4, and that is going to give me 3,100. So I end up with 3,100. That becomes my profit. You can see it's positive on the calculator. On the calculator, it's positive. And once it is positive, that is profit. If you stick to the formula that says selling price minus carrying value is equal to, if it's positive, then it's profit. If it was negative, that would have been loss. Okay, so let's come here and then we'll now say over here, we're now going to record what we call profit on sale of asset, profit on sale of asset. And the profit on the sale of asset is the 3,100, like that. Okay, I want to encourage you guys, show calculations. Like in this case, it is very important that you open a bracket and show calculations. All calculations must be shown. Do not leave calculations on your calculator, but show calculations on your answer book, especially in brackets, so that whoever marks your paper can see how you have arrived at the answer. So remember to show all calculations. Let's go to the next question. Okay, I know I'm a bit fast. It's because I have a lot to cover. I can hear someone saying, Mr. Simbi, please, can you slow down? I want to slow down, but I have quite more to cover. Okay, so I'm going to tone it down a bit, but I want to encourage you also to be a bit faster so that we can cover as much ground as possible today. Okay, so this one here then says, calculate the total depreciation for the year. So when we calculate depreciation, this is easy because I know that I'm going to record this in my statement of comprehensive income under my operating expenses. So I'm going to come here and I'm going to say depreciation. Remember, that's an expense. So I have my depreciation. Let's open the bracket. All right. So remember, it is your sold, your old, and your new. Sold, old, and new. So far, I have my depreciation for my sold. How much was that? 15,600. Remember that one. So I have my 15,600 here. Then I'm going to come and say plus. I need depreciation for the old. I'm told depreciation on the remaining. So the remaining is the old now. I'm going to come and say plus 145,200. This one was given. Okay, then I'm going to add that one. Let's now go to the next part of the question. Now, we are given information on equipment, and we are told that equipment is depreciated at 15% per annum on cost. A new equipment was bought on the 31st of July. So we need to calculate depreciation on equipment. Now, we know that when we calculate again, we're going to calculate for the son. That is your sold, your old, and your new. All right, so here we don't have the sold, but we have the old. The old is what you have at the beginning. That is your old. And our old, I'm going to bring it up here. My old is 774,000. Then I say multiply. The rate is 15%. And remember, it's on cost. 15 over 100. The old is always going to be there for 12 over 12. So I'll say 774,000 and then multiply that by 15%. That's going to give me 116,100. That's 116,100. That's my depreciation for the old. Then do we have new? New equipment was bought. That means I'm going to come now and calculate for the new. How much was the new equipment? We are not told. But I know that the difference between the equipment in 2022 and the equipment in 2023 means that is the new. So I'm going to come here and I'm going to say my 882,000 minus my 774,000. That is going to tell me the new equipment, which is 1. Okay, let me do it again. I think I punched it. It's 822, not 882. It's 822. So it's 822,000. And then I'm going to subtract 774,000. Like that. That gives me 48. So the new one is 48,000. That is the new equipment. 48,000. Then I'm going to multiply that by 15 over 100. Then for how many months is it? It was purchased or it was bought on the 31st of July. Remember, we're coming to February. So if it was bought in July, do we count July? If it's the 31st of July, no. We start counting August, September, October, November, December, January, and then February. Okay, so how many months is that going to be? That's going to be 7 over 12. And then your depreciation is going to be 4,200. So I'm going to come here and then I'm going to now say depreciation All right. So remember, I already have depreciation for my vehicles. Remember, I already had my 15.6. I still remember that one. And then I had the 145.2. And then I'm going to come now and I'm going to add the 116,100 as well as the 4,200. Okay, so this is how I would record my depreciation. Remember, this is an expense which must be shown in the statement of comprehensive income. I want to emphasize that you must go and look again at the R1 residual value principle. Please do take time to also look at your note number 3, and also expose yourself to questions that involve the disposal of an asset, where an asset has been disposed. We've done one in here. So expose yourself to such questions as you prepare for the exam. And also know how to take amounts from either your note 3 or from these calculations onto the statement of financial position. That is of great importance. Okay, let's move on to the next aspect then. The next one is an adjustment that has to do with bad debts. And it says, received 9,000 from the insolvent estate of a debtor Billy Kroon, and his estate paid 80 cents in the rand of his outstanding balance. The money received was recorded. Very important that the money received was recorded. Now, what we're focusing on is the balance of his account, which must be written off. Okay, let's see how we can do that adjustment. We have to understand that the entire debt was 100%. In rands, we don't know that amount, but we have received an amount of 9,000, whereby the estate has paid 80 cents. That is 80%. So 80% has been paid, and that is equivalent to 9,000. That is equivalent to 9,000. What are we required to do? We are required to record in the statement of comprehensive income as well as the statement of financial position. What are we required to record? It is the 20% that is the balance of his account. So how much in rands is that? That is very simple. You simply use the UK or the Cremora method, that what you want is 20 and what you have is your 80, and you multiply that by 9,000 like that. So we're going to simply come in and we say what we want is 20 and what we have is 80, and then we multiply this by our 9,000. That is going to give me 2,250. So my bad debts is 2,250. That is the outstanding amount. So remember, always open brackets. So I'm going to come here and I'm going to say now bad debts. This is under my operating expenses, and I have my 16,200 here. 16,200. Then I'll come and say plus the bad debt of 2,250. I know that it will affect my current assets, trade and other receivables. I'll take my debtors control, which is my 645,250, and then I'll now say minus my 2,250 like that. Okay, I hope that makes sense. Okay, cool. Can I move on to the next one? Very, very important. So again, expose yourself to other adjustments that have to do with bad debts. Very important that you revise in this area. And then the next adjustment has to do with provision for bad debts. Provision for bad debts. Once again, we're going to record in the statement of comprehensive income and the statement of financial position. The adjustment reads, the provision for bad debts must be increased to. So these are very key words. We know that once your provision for bad debts has been increased, therefore we're dealing with an expense in the statement of comprehensive income. So hence you see operating expenses over there. But how much is the expense? Do we record the 25,720? No. In the statement of comprehensive income, we record either an increase, which we know is an expense, or a decrease, which we know is income. All right. So we will now say, how much was it before? It was 21,020. And now it is increased to 25,720. So I would say last year and this year. So the difference between them is the adjustment now. That is the adjustment that goes to your statement of comprehensive income. So I'm going to come here and I'm going to now say on my calculator, 21,020. And then I'm going to subtract the 25,720. The difference is 4,700. 4,700. And know that once it's an increase, it is an expense. So I'm going to come here on my expenses and I'm going to say provision for bad debts adjustment. All right. And then I'm going to say my 25,720 minus my 21,020. All right. And then I'm going to end up with my expense of 4,700. That is how I would record the expense. Do not make a mistake of bringing the 4,000 into the bracket. The 4,700 is the answer because in the statement of comprehensive income, we record the adjustment, which is the 4,700. But remember, this also affects your statement of financial position. And the question is, which amount do we record? In the statement of financial position, which is here, statement of financial position, we always record the to amount. Okay, the to amount. In other words, what have we adjusted our provision for bad debts to? So I'll come in, then I'll say minus. So I'm going to say minus, but I'm going to write the amount down below here. Minus the 25,720. Mr. Simbi, do we take that amount as it is? Yes. Once it says to, that to amount goes to the balance sheet. But in the income statement, we record either the increase or the decrease. Are we good? Okay, cool. So remember again, expose yourself to adjustments where this amount is not given, but at times the examiner can say the provision for bad debts must be adjusted to 5%. So expose yourself to such adjustments where you're given 5% or 6% or 3%. That will assist you in calculating the provision for bad debts adjustment. Okay, let's go on to the next adjustment then. Okay, so this is a common adjustment that has been coming in most recent papers. All right, director's fees adjustment. Okay, so what I have been doing in these classes is to bring my directors to class as well. Okay, so the company has two directors. So we know here's the first director, here's the second director that were appointed in 2019. So this simply means they've been there from the past because we are in 2023. So once you see the examiner giving you a date in the past, they're simply saying these guys have been there. Okay, so they've been there in the past. A third director was appointed. There is the third guy on 1 October. So this is appointed in this financial year, 2022. The directors all earn the same monthly fee. Okay, so they all earn the same monthly fee. And directors' fees paid during the financial year have been recorded, but one director has been paid for March and April. Is that a problem? Yes, because our directors were supposed to be paid from March to February 2023, March 2022. But unfortunately, there is another director who has been paid for March and April again in 2023. In other words, we were supposed to have paid for 12 months, but we've paid for 13, 14. So there is one director, only one, who has been paid for 14 months. That means the other guy has been paid for 12 months. And then this new director, the new director, was appointed on the 1st of October. So we'll count October, November, December, January, and February. So this guy has been there for 5 months. So we're going to add everything now. It's going to be 14 plus 12. That is 26 plus 5. That gives you 31. So in total, we've paid director's fees for 31 months. That simply means if I take my director's fees of 2,015,000, I divide that by 31. Let's see how much that is going to give me. I'm going to say my 2,015,000 2,015,000. I divide that by 31. That's going to give me 65,000. That means each director is getting 65,000 per month. Each director is getting 65,000 per month. What is our problem in this adjustment? We've paid one of the directors for March and April. Okay, so for 2 months, that's going to give me 130,000. Let's come here and see. Under my operating expenses, I'm coming and I'm going to say directors' fees. And I'm going to say it is 2,015,000. But I have a prepaid expense because I paid directors for 2 extra months. And all my prepaid expenses must be subtracted minus 130,000 over here. And then I'll come here. Once we have a prepaid expense, it goes to trade in other receivables. So I'll come and then I'll say plus 130,000 because that is a prepaid expense. Expose yourself to other different adjustments on the director's fees. I know there are several ones that we've been doing during the year. Please expose yourself to such adjustments. There are some that increase by a percentage, others would have decreased, other ones would have been paid when they are on a holiday. Expose yourself to such adjustment that will assist you. But remember, when you do them, address the statement of comprehensive income, address the statement of financial position as well. Can I go on to the next one? Let's do so. Okay, the next one is rent income. Rent income. And we're given, okay, so we're going to record it again. Statement of comprehensive income, statement of financial position. Let's hear what this adjustment is saying. Rent income includes rent for March. Okay, so remember, the year ends in February. So rent income includes rent for March. So already we have income received in advance. We have received this from our tenant. The monthly rent was increased by 1,170 on the 1st of January. That simply means if I take this amount and I divide it by 13, that will not be correct because the rent has not been consistent throughout. So the easiest way is to take out that increase which was effected on the 1st of January. Then we can divide our months then. How do we do that? We simply say the 1,170 was increased as of the 1st of January. And for how many months was that effective? So it's January, February, the year ended. But we know that we've received for March. So March, then we have the 3rd month. So let's see our adding machine. That's going to be 1,170. Then we multiply that by 3. And that's going to give me 3,510. 3,510. Like that. So that is the total increase. That means I will come to my 89,700. Then I'll subtract the 3,510. All right. Let's see. So I will come and say 89,700. That's 89.7. Then I'll say minus 3,510. Like that. That's going to give me 86,190. Okay. So I end up with 86,190. With that 86,190, this then is the rent for 13 months without any increase. So I can divide this by 13 easily now. Let's see. I'll say divide by 13. Then that will give me 6,630. So I end up with 6,630. This therefore becomes my rent per month. Okay, rent per month. And then I know that if it's 6,630 per month, and it was increasing by 1,170. So I'm going to add the increase back plus 1,170. And that is going to give me 7,800. So I end up with 7,800. The 7,800, therefore, is the rent that we've received in advance for the month of March. So on my other income, I'm coming here to say rent income. Rent income, and then I open my brackets and I'll say my 89,700, and then I'm going to subtract my income received in advance, which is 7,800. I like that. Okay, and then I'm going to come, once I've received income in advance, it goes to trade and other payables. So I'm going to come here, then I'm going to say income received in advance. Okay, I just wanted to show you that this will come here as 7,800 like that. Okay, I'm going to now move on to the next adjustment. Let's move on to the next one. Here it is, on the loan. Okay, but once again, let me come back here on the rent adjustment. I know I've been telling you to practice other several different adjustments. Expose yourself to different ways of calculating the rent adjustment. There's one that comes with a percentage. There's one whereby repairs are done and then the money is deducted from the rent. Expose yourself to such adjustments such that whatever the examiner can bring, you may be equally prepared. Okay, let's go on to the loan adjustment. Loan adjustment. It reads, interest on loan capitalized has not been recorded. Fixed monthly repayment including interest have been paid and recorded for the financial year. Interest on the loan amounts to 60% of the monthly repayments. Okay, so we know that in 2022 it was 690, but in 2023 it is 524.4. That means there has been repayments in this regard. So we want to know, what are we to prepare here? The statement of comprehensive income. Okay, so to do that, it's very easy. We're going to now say, how much have we paid on the loan? It was 690,000, and then we subtract the 524,400, like that. We're going to remain with 165,600. So I'm going to come here, that's 165,600. Then that 165,600, and then we get 60% of that. We get 60% of that. Okay, so I'm going to come here and I'm going to say 165.6 by 60%. That's going to give me 99,360. 99,360. So I'll come here and then I'll now say interest on loan. Okay, so remember, show calculations in brackets. Here I have my 165.6 and then I'm getting 60% of that, which is the interest on the loan. So that is going to give me my 99,360. That becomes the interest expense. Okay, let's go on to the next one. It says income tax for the year was calculated as, all right. So again, I want to remind you to do several loan adjustments. I'm not going to take you back again to the loan adjustment, but again, expose yourself to different loan adjustments. There's a lot that are out there. Please practice on your loan adjustments. Here we're talking about the net profit before tax and income tax, and then the net profit after tax. So this one, I already have done it, so then I can cover a bit of time. So what I did here to get this amount, this was not given in the answer book. Okay, so you were given your net profit after tax, and then on your income tax, we're told income tax was calculated as that one. So you end up with that one. And the question that becomes, how do you get that amount when you go up? Remember to switch the signs. You're simply saying you're 2,002,500, and then you're going to add the 858,140. Okay, so it's a 2,002,500, and then you're adding your 858,140. That is how you end up with your 2,860,640 over there. That is how you end up with that one. But if you were to prepare the statement of financial position, what would you have done? Okay, so remember, we've already done this one. The moment your provisional tax payments are more, than your income tax for the year, that simply means you have paid more to SARS. So SARS now owes us as a company. It becomes a receivable. So we simply get the difference between the provisional payments, which we have paid, which is 875,000, and then we subtract the 858,140. We subtract the 858,140, and then we remain with my 16,860. So I'm going to come here. It's a receivable, 16,860. That is a receivable amount. Once I've done that one, then I will be sorted. Very important that you expose yourself again to different ways of calculating this income tax. Okay. Let's quickly now move on to activity number 2. Activity number 2. If you're ready, let's start. Activity number 2 has to do now with your cash flow statement, but it required us to do the retained income note for the year. So let's quickly jump onto it and see what we can do. Okay, and then we're given some amounts here. So the balance at the beginning was given and the net profit after tax was given. So the next thing that we had to do here was to record the repurchase of shares. The repurchase of shares. Okay, let's see if we can do it properly then. So for us to do the repurchase of shares, we're going to come here, then we're going to say repurchase of shares. All right, open my bracket. We are told that 180,000 shares were repurchased on 1 May, and these do not qualify for dividends. An EFT of 1,989,000 was issued for the repurchase. So we want the amount that we record in the retained income note. Okay, so remember, we always have that triangle that you have to keep in mind, that at the top it is a cash flow amount, which is the EFT that was paid, which is your 1,989,000. That is the EFT that was issued. Okay, and then here we're going to have the ordinary share, and then here we have the retained income, the amount above. Okay, so to make this a bit easy, let's see if we try to open a mini ordinary share capital note. So what that means is, at the beginning, we had an amount on ordinary share capital, which is the 12 million here. So you can see it's 12,312,500. It is a 12,312,500. And this is at the beginning. And your number of shares were 1,250,000 shares. And then immediately after that, then they say the company repurchased. Immediately after that. Okay, so how much is being repurchased? 180,000. Then the question is, how do I get the amount that I show here? I know that I have to get the average price. This is easy then. You simply take your capital and divide by the number of shares, because there was no new issue of shares that was done. In other words, I'm simply taking my 12,312,500 and I'm going to divide it by the number of shares, which is 1,250,000 shares, and that's going to give me my average price. So I'm now going to say the 12,312,500, like that, 12,312,500, and then we're going to divide by 1,250,000, 1,250,000, like that, and then that's going to give me 9 rand 85. Okay, so my average price per share is 9 rand 85. So it simply means when I come here, I have ordinary share capital 9 rand 85 here, and on the cash flow, how much was it? It's simple. I simply divide my 1,989,000 by 180,000 shares there. All right. So I'll simply say my 1,989,000, and then I divide that by the number of shares that we've repurchased. Remember, that's 180,000. I divide that by 180,000, and that's going to give me my 11 rand 5 cents. So this is what would have been here, 11 rand and 5 cents. Remember, I could have used the rand value again, the total amount, to get what I want to do here. But I just wanted to show you, if I calculate it as per share, there is other ways in which I could have done this one. I wanted to show you if it is per share. So I'll now say 11 rand 5 minus 9 rand 85. 11 rand 5 minus 9 rand 85. And that is going to give me my 1 rand 20. So my 1 rand 20 is the one that goes to the retained income. So I'm going to come here and I'm going to say 180,000 shares multiply by 1.2. Okay, calculator, 1.2, multiply that by 180,000, like that. And that's going to give me, in brackets, remember it's a repurchase, that is your 216,000, like that. 216,000 in brackets. Okay, there is another way that I could have used, but I thought, let me show you this one. as it will help you if you're going to complete this one. You're going to use your 9 Rand 85 over here. Then you get that one. And then you continue with your note number 7. Okay, so remember, we are busy with note number 8. Let's go to the next aspect. All right, so we are here already. Then we're going to do our interim dividends. And we're told that an interim dividend of 32 cents per share was paid on the 31st of August. All right, but after the repurchase year, we're told that these shares do not qualify for dividends. So in other words, if we're going to give an interim dividend in August, which is in between here, how many shares are we having? So we then say the 1,250,000, come here, my friend. So we'd say the 1,250,000, which is what we have at the beginning, 1,250,000. Then we subtract the shares that were repurchased, subtract the 180,000. That's going to give me 1,070,000. 1,070,000. So when I come to give my interim dividend, I'm giving it to the 1,070,000. And that interim dividend is 32 cents. So I'm coming here to say 1,070,000 multiplied by 32 cents. In brackets, I'm now going to have my interim dividend, which is 342,400. 342,400. That is in brackets. And then I'm now going to have my final dividend. Okay, here we're told a final dividend was declared and they don't give us the dividend per share. That means they must have given me something. Okay, let me see. Here in the statement of financial position, I was given shareholders for dividends. That's my final dividend, which is going to be my 575,400. So I'm going to add those two, calculator. So I'm going to say 342,400. Then I'm going to add my 575,400. Okay, then I'm going to end up now with the total, which is 917,800. So I'm coming here, that's 917,800. Remember, that has to be in brackets so I can get the one at the bottom there. How do I do that? Let's start it together from the top. So I'm going to take the 2 million, the balance at the beginning is the 237. Okay, so it's the 237,400. The 237,400. Then I'm going to add my 1,526,000. Okay, that is my net profit after tax. I add my 1,526,000, and then I subtract the repurchase of shares, which is my 216,000. I subtract that one. Okay, let me just say equals for now, and then I take out the dividends. Then I say minus 917,800 minus 917,800. Then I remain with 629,600. So here it becomes 629,600. That becomes the balance at the end of the year. That becomes the balance at the end of the year. And there is the question when it's completely done. Activity number 3. Let's go. This is an extract from the Free State Prelim for the year 2024. And in here, remember, we're in the cash flow. So we're going to do certain calculations. Let's see how far we can go. All right. So here's the information. And then to begin with, we're going to calculate the tax paid. We're going to calculate the tax paid. There is several ways that can be used to do this. The one that you understand the best, please stick to that one. The one that your teacher has explained to you and you've understood that one, please stick to that method. Do not try something new tomorrow. Stick to what you know best. In this class, we're going to open a T account, and then we're going to now say the balance in 2023. The balance in 2023 was a credit balance. Was a credit balance of 110, so which is that one there. So I'm going to come here and I'm going to say my balance brought down, that is 110,000 over there. And then the balance at the end, we're given the balance at the end, all right, which is a debit balance 125. All right, so let me see if I can squeeze it here. So if I am going to squeeze it, they said it's a debit balance. That means first it has to be a credit balance, carried down. So remember here, I'm going to have my income tax. Here I'm going to have my income tax. And then here I'm going to have my balance carried down, because here it has to be balance brought down here. Balance brought down here, which is 125,000 over there. 125,000 over there. Okay, so here I have my double lines, and there are my double lines. Okay, so the carry down becomes 125,000 over here as well. So the only thing that I need now is my income tax for the year. And I've been told that income tax is 30%. Income tax is 30% of the net profit. Income tax is 30% of the net profit. And here I'm given net profit before tax. So I'm simply saying my 1,340,000. 1,340,000, then I get my 30%, and that's going to give me 402,000. So I get my 402,000. So I'm just going to add that, and then that gives me my bank over there, which is my 637,000. 637,000. That becomes my income tax paid. Okay, so remember, calculations are very important when you are preparing your cash flow statement. Then the next one says, calculate the amount invested during the year. So we're looking at the fixed deposit, and you can see your fixed deposit. In 2023, it was 1,450,000. In 2024, it is now 1,610,000. That means we've invested some money. All right, so if we are going to calculate the amount invested, so remember in the cash flow statement, this will be under your investing activities. I'll simply say the 1,610,000, the 1,610,000, which is the amount in 2024 minus the 1,450,000, and then we see that we have invested 160,000. Remember, when you prepare the cash flow statement, in the cash flow statement under your investing activities, this would be a cash outflow. That would be a cash outflow. Okay, I'm going to move on to the next aspect, repayment of loan. The repayment of loan. All right, so on the repayment of loan, you are given in 2023 that the loan was 2,450,000. In 2024, it's now 2,194,750. That shows a decrease in the loan. That means indeed the loan was repaid. So to get that one, I'll simply again say my 2,450,000 minus my 2,194,750. And the difference again is 255,250. And once we are talking about a repayment of loan, that is a cash outflow as well. Remember, your loan is part of your financing activities. And then I'm going to come and touch on the net change in cash and cash equivalents. All right, so when we calculate the net change in cash and cash equivalents, I would advise you first begin with your cash and cash equivalents at the beginning. So I would come here and then I would say my cash and cash equivalents at the beginning, that is in 2023. You can see in 2023 I had 25,000 here, 25,000 here, and then I had an overdraft. So watch out for the overdraft. This is where the examiner would try to throw you off balance, which is 124,500 minus 124,500. That is the overdraft. On my calculator, I will now say 25,000, exactly as I've written it, 25,000 minus the 124,500 minus the 124,500. And that's going to give me a negative 99,500. So already when I come here, I have my bracket, which is 99.5 in there. That's a negative. In 2024, which is now my cash and cash equivalents at the end, I now have, which is 427,685. This is my cash and cash equivalents at the end. Then on my calculator, I'll now say, remember, I'm now doing the bottom up. I'm now doing the bottom up, and I must reverse the signs therefore. So I'll now say I'm going to begin with 427, 685, 427, 685, and then I'm going to say the one that is a negative, the 99.5. I'm not going to subtract that. I'm going to add it now because I've reversed the signs because I'm doing the bottom up. I reverse the sign of the 99.5 plus 99.5. And that is now going to give me 527, 185. That gives me 527, 185. 527, 185. On your cash flow statement, I want to encourage you to also go and look at the entire format. Format is very important. Start with your note. All right. Start with the note to the cash flow. Know how to get all the amounts, your depreciation, your interest. Please take time and work on your changes in working capital. Your changes in working capital is very important, that you know what does an increase in inventory mean, what does a decrease mean, and then go to trade and other receivables as well as trade and other payables. Please do those calculations. It's very important. And then know your entire format of the cash flow statement. Here we only did just a handful, just a few, but do the entire thing. Remember, your fixed assets can also be tested in the cash flow statement. Don't forget to do calculations that pertain to fixed assets in relation to the cash flow statement as well. Okay, activity number 4, it is. Let's begin. And then it says, calculate the following financial indicators. So the first one, now it is very important that you know your formula to the financial indicators. I know the formula sheet is in there and I'm going to show you the formula sheet here, but it is very important. It's an advantage to you if you know your formulas offhand, so that when you see the question, you can simply calculate and you get the answer. It's an advantage if you know your formulas properly. Okay, so the first one wants us to do the acid test ratio. And the acid test ratio, remember, it is your current assets minus the stock as to your current liabilities, like that. Okay, and remember, it's a ratio, so the answer has to be as to 1. Okay, so I'm not going to add the inventory and then subtract it. It doesn't make sense. I'm just not going to add the inventory in the first place. So I'm going to say here, I'm going to have my current assets already. I'm going to have my current assets already without stock, my current assets without stock, and then here I'm going to have my current liabilities. So I'm not even going to touch the stock because I don't want it. So I'm going to take my trade and other receivables, which is 534, 330. So I'm coming here to say 534, 330. And then I'm going to add my income tax, which is 125,000 over there, like that. And then I'm going to add my cash and cash equivalents, which is my 427,685, like that. And then that is it. And then I'm going to come to my current liabilities, whereby I only have my trade and other payables, which is 324,000, like that. Okay, let's add these amounts and let's see how much we come up with. So it's going to be 534, 330, 534, 330. And then I'm going to say plus 125,000. Plus 125,000, like that. Then I'm going to say plus 427,685. 427,685. And then that's going to give me 1,087,015. Okay, 1,087,015. And then that's the total. So when I come here now, I'm going to say on my current assets minus stock, I have 1,087,015. And then on my current liabilities, I have 324,000. Remember, your answer has to be as to 1. So I'm going to divide everything by 324,000 so that I get 1 here. And then I'm going to divide this by 324,000. So I'm going to come here and I'm going to say that divide by 324,000. 324,000, like that. And that's going to give me 3.35. And then we round off to 1 decimal point, that is 3.4. All right, 3.4. I've rounded it to 1 decimal point. So it becomes 3.4 as to 1. Remember to read the instructions in the question paper carefully. as you begin your examination. Let's go to the next calculation. It says calculate the debt equity, debt equity. So within the name is the formula. It is your debt as to equity. It is your debt as to equity. So your debt, we're talking non-current liabilities. Non-current liabilities there. Your mortgage loan. It is your 2,194,750. It is your debt as to the equity. Here's the equity. That is your 4,969,750. Okay, and then divide. Remember, it's a ratio, so it has to be S to 1. So I divide that by the 4,969,750, so that here I get 1. All right, and then I come here, I do the same. I divide by 4,969,750. Let's get the adding machine. Let's see what it says. It's 2,194,750. 2,194,750. And then we're going to divide by the 4,969,750. 969,750. And that is going to give me 0.44. So if I round it off to 1 decimal point, it's just going to be 0.4 S to 1. That is my debt equity. Move on to the next one. Let's do so. The next one then says the percentage return on average shareholders' equity. Here we're talking ROCE. Okay, the percentage return on average shareholders' equity. Okay, let's see. Do we have more information? There it is. So once I hear return, okay, once I hear return, it means I'm talking to my net profit after tax. All right. So here we're told income tax is 30%. All right. So net profit before tax, it would be 100. Income tax is 30. Therefore, net profit after tax becomes 70. So what I want is 70% of the 1,340,000. Of the 1,340,000, I want 70% of that. That gives me my net profit after tax. Let's see if I can punch that. So I'm going to say 1,340,000. 1,340,000. And I need to get 70% of that. And that's going to give me 938,000. So I'm going to come here. That is 938,000. 938,000. And then I'm going to divide that. Okay. So I know here it's my net profit after tax over average shareholders' equity. That simply means, all right, that simply means I'm taking my shareholders' equity in 2023, which is my 3,661,750. Then I'm going to add the 4,969,750. And then, remember, and then I average these ones. Okay, so if I do that on my calculator, I'll end up with 4,315,750. And then remember, we're multiplying this by 100 over 1. And then my answer becomes 21.7%. That is the return, 21.7%. I just wanted to show you how to break this down and not just punch everything into the calculator. You need to break it down nicely. Okay. And then the next one is my net asset value per share. My net asset value per share, which is your NAV. Your NAV. All right. So for me to get my net asset value per share, remember, it is my shareholders' equity, which is my 4,969,750. And I divide this by the number of shares. Okay. Here's the number of shares I've written on top of it. So the number of shares is 1.7 million. Okay, it's not a problem. Let's do this one. Okay, let's remove that one. And then we come back to it again. Let's do that one. Okay, so the number of shares is 1,700,000 shares. So if I'm going to take my shareholders' equity, it is going to be my 4,969,750. And I divide that by my number of shares, which is my 1.7 million shares. And then remember, it is multiplied by 100 cents. Your answer has to be in cents. Let's see if we can get a calculator. That is the 4,969,750. 1.750, and then we divide that by the 1.7 million shares, like that, 1.7 million shares. And then remember, we are multiplying by 100, then that's going to give me 292.3 cents. Okay, 292.3 cents. Okay, so before I conclude this aspect, remember there are other financial indicators which I did not calculate in here, such as your return on total capital employed. Remember, that's the longest one. You need to know these financial indicators before you go into the exam. Just in case the examiner brings such a financial indicator, you should be covered and sorted. Okay, we're almost at the end of our lesson. Time is no longer on our side, but before I can say goodbye, let me start activity number 5. These ones, I call them extra adjustments. These are just some interesting adjustments that I bumped into as we were preparing for the final exam. And this one is a loan adjustment. Okay, so you might have seen some short videos that were making rounds with the loan adjustments. This adjustment was not included in those ones. Okay, so this one is a bit interesting because there is an additional loan and there's a repayment of loan again. So I wanted to see how we can do that in a ledger account. Let's see how we can do that. So here's my loan account. I know it's a liability. So on the credit side, it will increase. On the debit side, it will decrease. So I'll start with my loan in 2023. So I'll come here, then I'll say my balance brought down. That is going to give me 12 million over here. 12 million over there. Okay. And then we'll now say additional loan. So we've received a loan. So I'm just going to call it bank here. All right. So I'm going to say additional loan, 2 million. Okay. So the one that we've always been doing does not have an additional loan in it, but this one has an additional loan. Okay. That's why I brought it here today. And then we are then told that total repayments for the loan. So total repayments, that means I'm coming here, my total repayments, that is my bank. It is 2,625,000. But I know that this includes interest. And then I'm now going to have my interest here because that's what we're looking for, the interest. That is what we're looking for. All right. So then I'm now going to have my balance carry down, which has to become my balance brought down. And that is going to be my 12.5 million over there. Okay, so here it's going to be 12.5 million as well. So we want to get that interest over here. How do we do that? We, again, look for the side with the highest amount, which is my debit side, where I have 12.5 million. 12.5 million. And I also have, that is 12.5 million, okay, in half zeros. And then I also have 2,625,000 plus 2,625,000 like that. 2,625,000 like that. So that's going to give me 15,125,000. So I end up with 15,125,000 like that. That's 15,125,000 like that. And then I subtract this 14 million over there. Then I subtract, then I'm going to say minus 12 million. All right. Then I say again, minus 2 million. Minus 2 million again. Is that enough zeros? That is enough zeros. Okay. So I'm going to end up with 1,125,000. That becomes the interest. 1,125,000. That becomes the interest. Okay. So this one is a different adjustment. So if I'm doing my statement of comprehensive income, I'm going to come here and then I'm going to say my interest is going to be 1,125,000. Remember, that's interest expense. But if I were doing the cash flow statement, cash effects from financing activities, then I would say loan received. I'm just going to call it loan received. I know others would say proceeds from loan. Loan received, we've received a loan of 2 million. And we have repayment of loan. At the same time, we have repayment of loan. And the repayment of loan now, I'm going to say the 2,625,000. Then I'm going to remove the interest, which is 1,125,000. Okay, which is the 1,125,000. And then I'm going to remain with just 1.5 million. And that is the repayment on the loan. Okay, So this, I just found it to be a very interesting adjustment. And I thought, you know what, let me just bring it here. And then the last one that I'm going to bring is this one here. And in this one, we are just completing this part. We are doing more or less a note 7. So the examiner can test note 7 in several ways, where at times they can say do note 7, at times they can just give you information and you must do your note number 7. So in this case, we want to know if we are to record the repurchase of shares, analyze the repurchase of shares. We're going to analyze it here, the repurchase of shares. Okay, so we know that the repurchase of shares, we are going to use the average price. Okay, so the company bought back 150,000 shares and they paid that much. Okay, but we want to see if we can get the average price. So to make this easy, I'm just going to get a line here and I'm going to say my rands at the top, at the bottom is the shares. So I'm going to start with my 17 million, which is ordinary share capital, 17,875,000, like that. All right, and then the shares is 2,750,000 at the bottom, like that. Then I'm going to say plus, because there's an issue of shares, an additional 750,000 shares were issued. So here I have 750,000 shares issued at 10 rands. So that would give me 7.5 million. Okay, that would give me 7.5 million. So if I'm to simplify that calculation, I would end up now with 25 million. I'm simply saying 17 plus the 7.5. I'm going to end up with 25,375,000. And then I divide all of that by the bottom part, which is 3.5 million. So if I divide this, then I get my average price per share. All right, I get my average price per share. Let's see if we can get that one then. So I'm going to say 25,375,000. 25,375,000. Then I'm going to divide that by 3.5 million. And that's going to give me 7 Rand 25. That's going to give me 7 Rand 25. That becomes my average price. So it simply means if I'm going to come here and I'm going to record, I know the cash flow amount is 1,710,000. Okay, but the ordinary share capital amount is going to be 7 Rand 25. It's going to be 7 Rand 25. Multiply that by 150,000. Multiply that by 150,000. That's going to give me 1,087,500. That's going to give me 1,087,500. Okay, and then the difference between these two, is what comes now to the retained income. Okay, so I'm going to say that minus the 1,710,000. 1,710,000, and that's going to give me 622,500, which I bring here 622,500. So in essence, I'll come here and then I'll say which account. I know when we repurchase shares and we're going to credit our bank, so I'm crediting my bank here and debiting my ordinary share capital, and the amount is going to be 1,087,500. Like that. And then the next one, I'm going to debit my retained income and I'm still crediting my bank, and the amount is going to be my 622,500. I just thought I should pass by here. Let me now come to the last part of my presentation, which has to do with major shareholding. All right, so in this case, we are told that the directors of a company decided to issue 50,000 more shares in the financial year. Calculate the minimum number of shares that Lucas must buy to become a majority shareholder. So already Lucas is holding 48%. Okay, so if Lucas is holding 48% of the 650,000, he's holding 48%. That means he's having 312,000 shares. So he's having 312,000 shares here. And now, if the company issues 50,000 more shares in the financial year, okay, and then remember they have 650, so it's going to be 650, then we're going to say plus the 50,000. That's going to give us now how much? That's going to give us 700. So of the 700,000 shares, If he is to become a majority shareholder, remember he has to hold 51%. Okay, I know there's the 50 plus 1, the 50 plus 100, but for the sake of this class, to make it easy for you in the exam, I would recommend that you use 51%. So I'd say 700,000, multiply that by 51%, and that will give you 357,000 shares. If he's to become a major shareholder, he must have 357,000 shares. But currently, he has 312,000 shares. So how many more shares must he buy? You're simply getting the difference, which is 45,000 shares. So he has to buy 45,000 shares if he is to become a major shareholder. Why would you want to do that? To become a major shareholder, to influence strategic decisions, to influence business operations, and he sees the potential in the company and he wants to be part of the future growth of the company. My dear learners, we've come to the end of today's class, but before I say goodbye, here's the formula sheet. It's very important that you know that you stand to earn plus or minus 12 marks in your financial indicator calculations. And know your formula sheet so that you can do well tomorrow. Then in conclusion, remember to manage your time and do not waste time. Okay, so do not waste time too much on one topic and display your workings to earn part marks. And remember to know your formats, that is on the financial statements, and use the material available, that is the short video clips, the live lessons that have been going on throughout the year. And then remember to prepare on your analysis and interpretation and more activities on major shareholding. Please do your auditing and corporate governance together with the adjustments that are not covered in this presentation. We have come to the end of today's lesson. It has been a long road. It has been a long road from the beginning of the year. I think from January we've been having these classes, and I want to thank you for attending the classes. But above all, I want you to take all that you have into the exam venue tomorrow. Arrive on time, arrive early. Make sure that you have all your stationery ready and your calculator is on, and you're taking a calculator that you trust. I want to tell you that personally, I believe in you, and I know that tomorrow is your day to put a mark. Write that paper, put everything you got, everything that your teacher has put in you. Please go and write that. Open brackets. Calculations must be done on the answer book. Don't do calculations on the calculator and leave them there. Calculations must be shown in brackets. Until next time, as we prepare for paper 2, I wish you all the best for tomorrow. I know you're going to make it. You're going to make us proud. Tomorrow, go with your head held up, knowing that this is all under control. Until next time, all the best for tomorrow. Goodbye.